Have you heard of the latest news? UOB One account cuts interest rate again. So you are thinking where to park cash now? Because if you have heard of the news, previously it was 2.5% on the first 150k, and now it will be dropped to 1.9% from the 1st December onwards. And this is all announced on my Telegram group. So if you missed the news, it's very important for you to join the Telegram group first of over 22,000 members, so that with other like-minded people in Honey Money SG, you can get the latest news firsthand. And it's very important that I want to discuss on this nerf, because it's going to affect how some people strategize and play their high-interest cash strategy. In fact, if we look at the UOB Tax Saver and the quarterly savings promotion, all these are going to get affected. For those people who have parked your cash in UOB One account, thinking to capitalize on the UOB Tax Saver to get some rebates or cashback on your tax payments, this time you need to think carefully whether that opportunity cost is worth it. And the very fact is that if you are also participating in the quarterly savings promotion, you know, the one where every quarter they try to ask you to save a fixed sum of money, and then they will lock it up for 6 months until the end of the period, then you will receive a lump sum of cashback or cash rebate. Then you have to think now, is the opportunity cost worth it, especially with 1.9% effective interest on the first 150k? Is it time for you to jump ship? So let's explore this in this video. But before that, I think I want to talk about the closest competitor first, OCBC 360 account, which is still offering 2.5% interest as of the recording date. And to be clear, the 2.5% effective interest for OCBC 360 is effective on the first 100k, so it's like 50k lesser than UOB One, and it has very similar requirements. For OCBC salary credit, you will need $1,800 credited into it, and then the card spend, you will need at least $500 on the OCBC credit cards, and also an incremental savings component of at least $500 in monthly average balance, or some of you call it average daily balance. But don't be too happy yet thinking that you should switch over to OCBC, because UOB One has always been a market leader all these years. So once UOB One, the market leader, drop its rates, expect the competitors like OCBC 360 to follow suit. And yeah, 2.5% now doesn't mean it will stay 2.5% forever. So don't be too happy yet, because all these are just a zero-sum game. One day, as interest rates continue to cut and fall, it will follow to match the market interest rate. But if I were to touch my heart and recommend a high interest savings account that can still be used and high effective interest right now, is the Standard Chartered BonusSaver account, where you can get up to 8% in effective interest. But that is not really realistic, because that involves some other insurance component. So if we just remove the insurance component and we just focus on the rest of the criteria on the first 100k, for example, salary credit, you only need 3,000 Singapore dollars. Card spend on BonusSaver, debit card or credit card, you need $1,000. And just with these two criteria alone, you can get an effective 3.05% interest. That's even higher than UOB One or OCBC 360 already. But that's not all, because if you have an investment category and you fulfill it, you can get an additional 2.5%, which makes it a total of up to 5.55% per annum interest. And how to fulfill the investment criteria is really simple. The most direct method is to look at the SC Invest portfolio. So you just lump sum 20k. Once your portfolio has been invested, you can just redeem it, you can sell it back on the same day, and this effective period of investment will be valid for 6 months. Okay, so you enjoy 6 months of invest bonus interest. And this is exactly what my current cash holdings is on now. It's my main bank account now, because 5.55%, and it is guaranteed, right, until Standard Chartered change their rates. I think it's the highest rate right now on the first 100k. But remember, this 5.55% is only up till the first $100,000 saved in the BonusSaver account. So what if you have higher amounts of cash above 100k? That's when you really have to look at alternatives, right? And if you have some idle cash, you don't know where to put, you want to look for another alternative to get better returns on idle cash, then how does getting 12% per annum plus $770 of free stock sound? Because here's the deal, I have an exclusive affiliate link for those of you who are still new to Longbridge, where you can get 18 Singapore dollars of cash coupon when you open a Longbridge account and a 12% interest boost coupon when you deposit just 2,000 Singapore dollars. And to be clear, the interest boost coupon can be applied to Longbridge Cash Plus subscriptions only, and is capped at 2,000 Singapore dollars of deposit. You can subscribe to Cash Plus by going to the Longbridge app, click Market, then Cash Plus, and opt in. Your funds will then be automatically subscribed. Then as usual, there are various tiers of free stock rewards when you complete the buy, trade, and hold requirements. And at a base tier of just 2,000 Singapore dollars of deposit, you complete 3 buy trades and hold for 30 days, you will get $80 of free NVIDIA and Apple stocks. And if we look at the top tier of $100,000 of deposit, we complete 8 buy trades and hold for 90 days, you can get 770 Singapore dollars of free NVIDIA and Apple stocks. And I understand that many of you come from high interest savings account or maybe 100k tier. So I would think that this is a good tier for all the 100k folks. Okay, you want to deposit and then you complete the requirements, can get all these free stocks on Longbridge, and it's really guaranteed rewards if you fulfill the terms and conditions. So if you see all the bank accounts, the T-bills, the fixed deposits, the SSB, it's all trending below 2% per annum. And I'm very sure that after the UOB One account nerf, some of you with 100 to 150k, you are really looking for alternative really. You really don't want to put in UOB One account at 1.9%, which is even lower than CPF OA 2.5% interest. I feel this is really an attractive offer that you should really capitalize on before the offer really expires. And I want to share that on Longbridge, you can invest in various products like stocks, ETFs, REITs, and options across the Singapore, Hong Kong, and US markets. And global funds are also available, like the Lion Global Short Duration Bond Fund, which I previously invested in. So don't miss the 12% plus free stocks exclusive promo. Check out Longbridge via my link in description today. While I get it, some of you have even higher amounts than 100k, and then you're looking at 200k, 300k. Where else to park your cash? Then another good option is definitely HSBC Everyday Global account, which is also a high interest savings account, because if we look at the November bonus interest campaign, it is 2% for the customer with wealth holdings. And wealth holdings can be something very simple, like just investing in a unit trust, or you buy shares and ETFs through the HSBC investment platform, which is what I have, right? Just open an investment account, do a small investment to be a wealth customer, and that's it. You have a wealth holding. But not just that, because if you look at the standard everyday plus rewards for the HSBC EGA, you get 1% bonus interest from EGA if you do the Ding Dong strategy. And I know many of you will ask, what's the Ding Dong strategy? Basically, it's an incremental fresh one strategy across 2 different HSBC accounts with an intermediary. But I have to admit that now it is very hard to ding dong with the new bank transfer rules, because if you have heard of the news, above 50k or 50% of funds, if you do one-time large transfers, the banks may see it like a fraud or scam case of potential. You know, they are suspicious. Everyone is very uptight about it, so banks may block the transfer up to 24 hours before they can release the transfer. So compared to the past, I really wouldn't recommend it too much. In fact, I appreciate the fact that I don't hold so much cash now, so I don't need to ding dong so much funds, right? But the very fact is, I still have some liquid cash in my HSBC Everyday Global account. It's just to pay bills and expense account, and then as funds for my investments that are ready to pounce in the market during DCA or during market crash. Now, having mentioned some of these accounts like UOB One, OCBC 360, Standard Chartered BonusSaver, HSBC Everyday Global account, I have one more interesting take, which is DBS Multiplier account, because we have neglected this account for a few years already. But you realize that DBS Multiplier, all these years, they never really changed their interest rates or, drop their interest rates, touch wood, right? Until a news announcement is coming up. But the fact is, you can really get up to 4.1% per annum on $30,000 of monthly eligible transactions. So what are the eligible transactions? We'll have a look. Firstly, income. So firstly, credit your salary, credit your income into a DBS account or DBS joint account, and then you need to have 3 categories, be it like credit card spend, home loan, investments, or insurance. So if you're able to fulfill the income credit plus 3 categories, you get the highest tier of interest rates, and also depending on how much AUM you have inside. But I would really recommend that it's quite easy to hit income plus credit card spend, and you choose between insurance and home loan. Which one is easier for you? For myself, I would say that it's better to just refinance my home loan. In a video I recently did, I refinanced my home loan to DBS because I really see the opportunity in capturing the low interest rates, especially for mortgage loans. So I've refinanced my loan with DBS, but it was for the POSB cashback bonus, not really for DBS multiplier. And anyway, if you subscribe to POSB cashback, you can switch it to multiplier one. It really depends on which cashback or which high interest program you really prefer. So as of now, I'd rather put in a POSB cashback bonus, but if you want to put in DBS multiplier for that 4.1%, I will really welcome it. In fact, if it makes sense for you. So if you want to watch that video on why I refinanced my loan from HDB to DBS bank loan, then you can comment refinance plus one in the comment section below, and then I'll share the link to it. But like I highlighted, right, if you're on the POSB cashback bonus campaign, okay, you cannot go and choose the DBS multiplier interest campaign. Out of these two, you can only choose one, and I've chosen the POSB cashback bonus campaign because my cash AUM is really not that much, so I cannot really capitalize on that full 4.1%. In fact, I think that Standard Chartered BonusSaver out of this few is really the best, 5.55%. I'll put my first main cash funds in there. And if you do not have a Standard Chartered BonusSaver account, you can also use my referral link in the description below to sign up. Get some new user welcome rewards. That's what we always do, right? Want to capitalize on the rewards first. Then you think about it later whether you want to do it. Because now all these bank accounts is really lowering their interest rates. No one really wants to keep cash already. And the banks don't even need your cash. So really the game of high interest savings account is almost over already. I've been telling this back for more than 1 year and sharing that I've been moving my positions away from all these high interest cash strategy because I really don't want to focus too much on this kind of cash flow, passive income instruments anymore. I felt that it's more important to really focus on active income, be it your business, your own career, your side hustles, all these that can generate higher returns, or even equities, right? If you have the risk appetite to invest in a broader market instead of just holding in cash, getting that 3 to 5% interest rate, which is going to devalue over time. And with the lower interest rates, it just doesn't make sense to hold more money in cash. Okay. In fact, if you look at one of my recent video on earning passive income from a short-term bond fund, even the return from that asset itself is already not so favorable after a few months. So you can take a look if you want an alternative of how you want to earn passive income from short-term bond funds in my previous video right here.